99% of you guys will not watch this video until the end, which is why 99% of you guys will not be multimillionaires. So we've all been told to take our money and lend it straight to the bank. But the banks have some of the smartest people in the world working for them. They have economists, attorneys, analysts, financial advisors, all of the above, all work for the bank. And the bank takes your money and they go put it into something called cash value life insurance. And the reason why they do this is because they get an average of 15% interest on the money that they put into this vehicle. Also, they get these perks: tax-free growth, no market risk, lawsuit protection, uninterrupted compound interest, liquidity, and much more. And so the bank takes your money, they go put it into cash value life insurance, they earn 15% on average. Then what they do is loan the money out back to all of you guys, and they charge an average of 20% for a credit card, around 3% for a mortgage, around 8% for car loans, around 10% for personal loans, business loans, and college loans. And then they pay you a whopping 0.01% interest, and they just made all of this money off of you. Now, what you could be doing, and what the rich do, and obviously the banks do, is they take that money and they go put it into an IUL. An IUL is cash value life insurance, stands for indexed universal life. You can also earn an average of 15% interest on your money. Now, you could do two things with it. You could have it sit in here and use the IUL as either a high yield savings account or like a supplemental retirement account. And let's just say you're 25, putting $500 a month in. You will have approximately $12.2 million at age 65. If you're 35 and you're putting $500 a month, then you'll have approximately $2.9 million. And if you are 45 putting $500 a month in, then you'll have approximately $700,000. But this is not limited to $500 like other types of accounts. You could be putting in $10,000 a month if you wanted to. You could be 45 putting $2,000 a month, and obviously this number be much higher. And if you are in your 20s making a bunch of money, well, compound interest and time are on your side. So the younger you start, the more money you put in, the more money you'll have at retirement. The alternative route you could go is you could be borrowing the money out of your IUL and putting it into income producing assets. For example, let's just say you borrow money out of your IUL. You go use it in real estate. Now you're making an ROI from your real estate. Let's just say you're making 20% cash on cash, but now you're getting an attached 15% on the back end because you're earning an average of 15% interest on the money in your IUL. And again, it's uninterrupted. You never stop earning that interest, even if you're borrowing it. Go ahead and click the link in my bio to open up your own infinite bank.